Well, good afternoon, Maverick traders. Welcome to January 31st. It is the last day of January, and it has been a pretty decent rally. And if you guys have missed it, there is no January 32nd. You can check my facts on that. I'm pretty sure there is. And I've got my 2 cents on the market, so we're going to talk about it because there has been a little bit of pessimism out there, but the markets seem to not really care. This is my opinion. That's why this is still up. Take responsibility for the outcome. Let's get into the market analysis. Now, folks, I'm going to go out on a limb here. Not a limb, but I'm going to be honest. I believe that the first thing that markets were going to do in 2023 was sell off. Now, we'd been moving lower anyways, but wow, it's like, hey, let's hold on. The markets are going to fall apart. We got the big recession coming. We're worried about inflation and blah, blah, blah. And these markets did the exact opposite, which is fine. We're seeing a lot of stuff in the earnings announcements and earnings results that are a little bit pessimistic or at least defensive moving forward. Stocks saying, hey, yeah, we did good or we came in line or we missed, but we don't expect much moving forward. We got a lot of tech companies laying off a lot of people, but these markets just don't care, and we had a pretty good surge. In fact, folks, I like to pull this up. Take a look at this chart. This is the end of the day today. Look at this buying into the close. And whenever I see this, I always scratch my head. Not only are we buying into the close, but folks, we're buying in ahead of a Fed announcement. So where does that leave us? Well, let's go to the news first here. I think the January surge, continued into the last day, of course, as the markets push higher into the close in light of, or I should say ahead of, a Fed announcement. It's going to be pretty interesting. All right, there's my opinion. Let's get into what happened. So the Dow, the S&P, the NASDAQ all higher, and not just a little bit, right in line with the volatility that I've been talking about since the beginning of the year. Not a 0.5% higher or a 1/4% higher, a full percent across the board, even more so. Dow's up 1%, S&P's up 1 and almost a half, NASDAQ over 1.5, Russell's 2.5. Big bounce in oil, 1.46%, but gold just slowly and boringly churned sideways to slightly higher. I'm not sure where that's going to take us. Let's look at the advanced decline line. 81% advancing versus 16% declining. This was an absolute surge. I know, guys, I just showed you that chart of the end of day, but everything was being purchased. I just think there's optimism, maybe the fear of missing out. If we don't get in now, we've missed the bottom of 2023. Call it what you will, guys. That's why we do these updates as much as possible. Above and below the 50-day moving average, we were at about 75-25 last time I did this. Just put a few more above that. We're at 80-20. Absolutely bullish, 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 bullish. There's that. I don't know how else to swing it. Doesn't mean that it's going to stay as such. Let's get into the charts and see what we can get out of the tea leaves here, right? So this candlestick today is going to be a very difficult one to kind of wipe out. I had literally just finished a class on the Marubozu candlestick, and this is a Marubozu on close, meaning it closed on its highs. The volume was pretty decent. I'd like to see something a little bit higher than that, but it is definitely surging higher. The expectations of a Marubozu is continuation in its direction, so I'd expect these markets to at least gap higher in the morning, if not open, and then just kind of surge higher, regardless of what the Fed does. Now, remember, the Fed's midday. Most Fed days, stock markets kind of churn sideways and wait for the Fed to do something, and then they react to it. But this is a pretty good, little bit of a corrective, or let's call it a consolidation at that 400 level that we've been talking about, and a very strong close here at the end. Resistance is the 410, and that is still in play. It's very difficult to play these stocks day to day. I talk a lot about this over the last week or so, because when you see these candlesticks gapping and gapping down and moving higher, gapping up and trading down and coming back and closing flat, the volatility is all over the place. There's a lot of movement. We took a look at the totals today, well over 1% on everything. But the overall trend is still in place. This is still a kind of sideways to a +1 move in the SPY. Let's take a look at the Qs, and you're going to see it's the exact same thing as well. I don't have the diamonds up today, but it's, hey, guess what? They're doing the same thing. So we have a resistance level on the Qs here, and it looks like it's pushing up against it. It's a little tighter than the SPY and even the diamonds, but we do have A little bit drop in volume, a good surge, closing on the highs, a Marabozu on close, if you guys are candlestick junkies. And the next higher probability expectations would be a move up, at least a gap. Whether it gaps up and falls apart, whether it opens sideways, surges up for the beginning of the day and falls apart, that's on the markets. We'll have to see how sentiment reacts to it. But what I'm seeing in sentiment right now is absolutely bullish, folks. Since I'm here, you guys need to see this. This is January 1st. And my expectations, that's right, I can admit when I'm wrong. My expectations were for a massive sell-off trading along this down descending triangle pattern, right? Knowing that there's bad news, knowing that companies are going to miss and project weaker. And here's the funny thing about this. Companies have missed numbers. Companies are projecting lower. Companies are retracting, firing people, so on and so forth. And we have this big surge to the upside. This is why we trade the markets in front of us. Now, whether this is an ABC correction and we fall apart the next day, I don't know. I don't care. But I'm not going to throw any sort of bearish stock out there or a bearish trade out there any longer term until I see these markets fall apart. Right now, we have a market sentiment and a market optimism that is outweighing whatever the Fed sees. My 2 cents again, right? This is opinion. Do I need to go back to the disclaimer? Take a look at our heat map. Everything's green. Everything participated. There's a couple of red ones in there. I'm pretty sure it's going to be specific to earnings or some news with it. But when you have 80% above their moving averages, you have an 81% participation in up moves. Yes, this is a general purchase of the markets. So the slope of the 2050, yes, folks, I had to zoom in on that. But that 50-day moving average is starting to tilt a little bit to the upside, so I'm going to go ahead and just increase it as green. I was at a 0, +1 for monthly, and weekly. Weekly was +1. I'm going to keep that, or excuse me, 0 on the weekly because I had a little bit of a hesitation. But we got this confirmation and Amara Bozo on the close. I'm moving to a +1. If I could take the Fed out of it, and I could take that out of it, this chart is definitely showing signs of diagonal bull. I mean, there's no way around it, so I have to be that way. Taking a look at some of the trades, I did this end of day post yesterday, so I pulled a lot of my Wednesday's trades, so I decided it'd be kind of fun to go back a day before that. Right, let's go to Tuesday of last week and see what Corey had on his docket. I went through a few of his trades, a few of the trades that we go on from the trading room, some of the stuff that's been floating around there, and I found some pretty good bull trades. Potential sideways and bearish. I'm just going to leave it up to you. If you guys want to see some, take a look at yesterday's end-of-day post and take a look at my class on Wednesday and or the trading room Friday because there are still some good trades out there. They're feasible. They're just not really doing much right now. But what I did like so I got Rider. What I liked about Rider is the candlestick pattern going over the last few days. This is the push-pull that I'm talking about. This is what makes it so difficult as a trader. So this closed down here, gapped a little lower, closed high. Then it gapped down and closed lower. Then it gapped, okay, this didn't gap at all, but then it closed higher. These 4 days moved an average, what's this, $92 to $95 up and down for 4 days in a row and didn't go anywhere net. I do like where it's at. I do like if it's going to continue the sentiment and optimism. It's in industrials, rental, and leasing. This is going to be more of a defensive play when it comes to the sector, according to me, right? I mean, you guys might have a different idea on what the sector is, but this is a defensive sector, and it is up at this 95. We do have a very high, tight base between that 92 and 95 level. So if the markets do, even if they go south, this might hang in there and maybe leak higher, but if the markets get bullish, this might break out. Okay. Something to keep on your watch list, but I do like it, and it carried over since the 17th of January. So let's get into UPS. Now, this was a bear trade. That's right, a bear trade. They came out, they beat numbers. Folks, once again, for you guys that have been late to the party, we've talked about this. This is a bad print. We had a lot of these happen on this same day in some major companies. So yeah, let's start a conspiracy theory blog, right? That'd be kind of fun. I don't know, whatever. But so you kind of have to just throw that out. Now, what I do like about UPS is it did stay above its 175, excluding this little bad print candle. And it did show a pretty good surge at the end of the day, but look at this volume. And the reason being is because UPS came out and said, we're okay, we're doing good, we beat our numbers. We don't expect a slowdown when it comes to delivery and packages and ordering and Amazon demand and all that stuff. So we've got a clear target here at the 190. If you want to go ahead and add a little bit of an ascending triangle pattern by using that 50-day moving average, I like it here. But when you see a company come out and fundamentally beat, for me, it gets a little bit easier to get behind it and purchase it in the longer term. Things could change. I have no idea what the Fed's going to do. If you don't like anything individually that has earnings, here is a financial ETF. This popped up as well, and it's just a beautiful ascending triangle pattern that seems to be moving higher and breaking out of its resistance. It's pretty close. I'm going all the way back here, folks, to August. Let me see if I can't get that line pretty straight. There it is. Yeah, popping above 80. It's got a little bit of a volume, but there's that Marubozu. That's right, folks. Check out the Marubozu candlestick patterns. They're kind of fun. But that could just be that last surge that I saw towards the end of the day that I showed you guys earlier. Whether this holds true or not, we'll see. All right, so that's what I kind of got. It's all bullish. Whether or not you agree with the bull or bear sentiment in the longer term, it is what it is. So stay focused on the overall pattern. These markets are experiencing some volatile moves. I showed you guys that. But trend patterns still remain in place. Now, guys, if you've been following along with my end-of-day posts, that first blog up there is the exact same one that I sent out yesterday, except I add the word still. Instead of trend patterns remain in place, I added still because there's no difference between yesterday and today. Nothing's changed, in my opinion. Fed announcement is tomorrow. The sentiment and the overall feel of these markets look to be betting on dovishness moving forward. And this isn't just today with that last surge into the close. This is since January. This is a market that's been defiant of, hey, we had to fire some people. We don't expect to grow as strong next quarter. Microsoft's a great example. Microsoft gaps down, it gets bought into. Some of these companies that aren't going to do well, they don't feel good, things are worried about the recession, they're being purchased. We've got a January that's done nothing but go up. So sentiment is absolutely bullish. And the markets are bullish regardless of what the Fed sees. So earnings reports, black and white here. Amgen, AMD, EA. These are all out already. Amgen has been going up and down from flat to down 1%, back and forth. AMD is up about 3% right now. And EA is down almost 6%, about 5.89%. Now, folks, this is after I post this video. This could change, so keep an eye on it. But we are in a slew of earnings. We got Meta, T-Mobile, we've got Philip Morris, Altria, we've got Humana, we've got Apple, Google, Amazon, Eli Lilly, Merck. Look at these guys. So we're in the thick of it here, right at the cusp of a Fed announcement. So I've been reading a whole lot of articles out there, and maybe you guys have too, about this is going to be this is going to be that. This is going to be the biggest bearish market we've seen in 40 years. All sorts of crap. Or hey, the bears are behind us. We're going to move higher. Volatility is definitely at its peak. But I'm going to add one little tidbit before I let you go. Fear is not. The volatility index is at historical lows. 20 is fine. That's the area where we need to be flipping a coin. But I haven't seen any participation in the volatility index, even with big moves down. Leave something to be said about where sentiment is driving these markets. All right, guys, that's all I got. That's my opinion. Let's see what happens, because I'll be chatting with you on the midweek update tomorrow. Thanks for joining me, and have a good evening. Bye, folks.